Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Monday, October 5th, 2020. I'll start out with the broad markets, and this one really will be brief. There's hardly anything to report new on the broad markets, on the stock market, and that's why I didn't cover that earlier today. I did put out a post with some updates on gold and silver, the US dollar, as well as some of the other commodities I'm watching, like natural gas and coffee. So we'll touch on those briefly, and we'll touch on the stock market briefly. Here's a story. We're still sandwiched between this pretty significant, or what I consider to be a very significant resistance level, about 11,550 on NQ. We're starting out here with the futures. I'll get to QQQ in a second. And that is because that's where the rally has failed on every attempt since this correction has started. Whether we're still in the correction or the correction's over right here with that divergent low, hard to say. Really is from looking at the charts. A lot of technical cross currents. But the last time we tried, and it was a feeble attempt, and we marginally took out that level, but not impulsively at all. Put in a divergent high, and so that's it. So if you look at it this way, we're kind of boxed in that range right now. More near term is this is the range I'm looking at. So again, it's really about the recent highs, called a little bit above 550 or so, those previous highs. If we can take that out, then obviously it's going to be bullish for two reasons. It clearly takes out the 550 level, and it takes out the previous reaction high. And then what that is, it's just a continuation of the uptrend that we had off this 60-minute divergent low. So it looks something like that. An uptrend is simply a series of higher lows and higher highs in any security. So that's sort of the big level to watch, are the recent highs. Let's keep it, that simple. There's no reason to make it any more complex than that. Now on the flip side, we have right now, we put in a reaction low on Friday with the the reversal off this divergent high right there, but we reversed just above that previous reaction low, and they're close together. So again, that's the support zone that I'm looking at here. Obviously a break below that Friday's low, and then more importantly, I think below the low right here, that was September 30th low. That I believe will most likely open the door for more downside, and may indicate that this rally off the lows is over, and we're going to take another leg down. So that's it. Super simple stuff. We'll see if it pans out. What you want to look for too, if that low is taken out, what does it look like? Is it impulsive? Are there divergences in place at the time or not? Likewise, same thing. If we take out that high, what does it look like? Are these divergences that were in place at the highs last week, are they simply extended? They would be if we rallied up soon, and we could rally up to that next resistance level there, about 11,704. Or maybe the divergences are taken out at the time. Maybe we consolidate and work things off. But that's it. Until we move much above there or below there, it's all noise to me. Okay, looking at the QQQ 60-minute chart, which I'll zoom in here in a second. Just want to kind of draw out the bigger picture. Primary downtrend line, this also showed on the daily chart, although I have it here on the 60-minute chart. That was taken out. We had that sell signal early on back here, the breakdown, and this is what our correction has looked like since. We zoom in nice and tight, and similar story here. You have the level roughly 280.32, which has capped all the advances. And you could, at this point, since we had that marginal new high, and it was a very unconvincing breakout, and we had a reaction high that was a little higher there on QQQ, you might want to put the line there, somewhere around there. So call it about 282. That's the level right now, which the Qs need to break above. It's been the resistance level that every rally attempt up to that level since the correction started. That's where we've been rejected at. And similar story. Now you don't see all the reaction lows and highs here off the recent low that you do on NQ. That's why I started with the futures. Of course, you have those virtually around the clock trades in the futures, so you're going to have a lot more reaction points to pick up on, trend lines and resistance levels and support levels, etc. But to keep it simple, anything much below Friday's lows, there is a gap right there that was not backfilled, and we entered the gap, but you can see every 60-minute candle on Friday closed right on or around it. Other than that dump in the close, I told you I expected a dump in the close because President was in the hospital. COVID could have got worse. Obviously, it got better, and they're talking about him being released. I wouldn't hold my breath or put any stock in anything comes out of there. One thing I can tell you, and again, I'm far from an expert on this disease, but I'm still in the 5th week battling it. I'd like to tell you I'm better. Today is definitely a better day, although this is the most random thing I've ever experienced. I have consistent night sweats and chills and random, periods of fever and then, that muscle ache and flu-like symptoms. You're feeling fine 1 minute or close to fine, and an hour later you've got to hit the bed because your body's telling you, hey, this isn't right. You're feeling really lousy and weak, and muscle aches and all that stuff. So we'll see what happens with the president. I don't trade around news like that. There's no way to possibly predict what's going to happen. I mean, statistically speaking, although he's not in the healthiest group and age-wise and everything else, statistically speaking, he's not going to die from it. He's going to beat COVID. Again, that's the odds. You take age, his weight considerations, also factor in some of the best healthcare, medical care in the world. But again, we'll see what happens. And I only mention it because, sure, the market will probably react. I think at this point, especially considering that drop Friday, the best case scenario that everything's hunky-dory. I mean, they hit him with cocktails of medicines early on, which I think to me is whatever. I'm not a doctor, so I'm not going to speculate there. But if it takes another turn down, I think that takes away from the efficacy of those drugs if they've already been applied once, a lot like an antibiotic. So we'll see what happens. Hopefully they didn't, for his sake, they didn't use up too many of their bullets if he takes another jog down. So we'll see what happens. Again, the market may trade to that, may not, may shrug it off, especially if he's released and turns out to be one of those usual cases of 5 days to 2 weeks. That's what I've been reading, and I'm just one of the unlucky ones that's still going on 5 weeks later. All right, so those are the levels to watch, guys. And again, if we take another leg down, there is gap support right here on QQQ, double gap support. There's a gap right there. That gap was tested or halfway. There's another gap right there, and that is still was and is my minimum pullback target zone. The top of it at 272.39, give or take. Big level, I think, if it breaks, would open the door to 268.20 and quite possibly more. Again, let's see what happens in this recent boxed in range there. Until then, it's all noise, like I said, with QQQ or NQ. And not that SPY is not important, it certainly is. And my focus has been on the tech-heavy QQQs, but SPY is still is struggling with that same level it capped out at last week. You can see right there, and that is 330. What is that? 338.71. Yep, 338.71 resistance. There's also the 38 or 50. I'm sorry, 50% Fibonacci retracement just above that. And again, another failure so far there. Nothing impulsive. We could still pop it. And if we do, the level that I said was comparable with those that important resistance overhead on QQQ is right here. You can see those are those equal reaction highs at the same point back here in September. It's about the 9th and 10th down there, 15th, 16th, 17th right there. So that is the big level on SPY for me. If taken out, QQQ pops above the comparable resistance and SPY takes that out, I think we continue higher. Okay, next up, NG. I already posted an update on the homepage. I won't spend a lot of time. We did go on. We were coming up to, and we did hit that first target there at 2708. You can see almost to the button, and are followed by the typical reversal. The initial tag of a target or resistance level favors a pullback. So that gives you an opportunity, if you're an active trader, to close out your longs, cycle back in. Where to? Anywhere from here. It's hard to predict how far that we've gotten the reaction. There it is. You can see. I'm gonna have to guesstimate it here with a line. That's about 4% pullback so far, and constructive. This was a breakout. It was bullish. Here, let me tighten it up a little bit for you so you can clearly see it. There's an impulsive break through that level, tag of the first target / resistance level, and the expected reaction. I'd like to see it contained at, and this would offer an objective entry. Oops, flipped over to the wrong chart there. Let's get rid of that. Here we go. Okay, I need to add a line for you for a potential pullback level right here. Okay, and what I'm doing there is picking up a couple of those resistance levels, or reactions, I should say, couple reactions on that level, and that's you can see about 2,592, and that would be an ideal, if we get there, an ideal entry. Now this breakout was quite bullish. Sometimes you don't get that a drop that far, but all I can say is it's objective if we do to take a little bit above there, a little bit above that level with a stop somewhat below, and if that's broken, it's still going to be another objective level re-entry or long entry on a back test of the trend line with a stop, again not too far below. So anywhere, that's my bullish scenario and preferred scenario, that we reverse anywhere from about where we are. If the buyers step in like this breakout, missed it earlier and said, hey, look, we've just retraced a good part of that move, I'm going to step in here all the way down to that level. Next target remains, well, let me back up. Next objective long entry is on a break above that first target, 2708. You might want to now say that reaction high a little bit higher, since we had a brief momentum fueled overshoot, and that opens the door for a move up to the next target at 2915, which should come in roughly, depends if and when we get there, come in with that downtrend line I have as well there. So something along these lines up there. Again, if we get there quick, probably get a reaction, then break out above that level, hit the trend line. But they're in close proximity if we get to them around this time, and that would be in a couple days from now. And for your ETF traders, I gave you a chart of UNG. All lines on there are levels. So if a line is below where it was this morning when I posted, I think we were somewhere right about here. We went up, boom, hit that 1221 target. That was your objective time to take profits if you're an active trader. Certainly not an objective time to go long when you're just below resistance, up over 10%. This thing was up well over 10% this morning. Natural gas, that is. And same story, positive divergence at the lows, as pointed out last week. And now we've pulled back to support, the first support level I have on that chart, which is 1175. That is the bottom of this big old gap right here, and this gap as well, and this gap as well. So triple gap resistance, and that's why I like nat gas as a re-entry here, with a stop somewhat below. And if it goes a little lower, I mean, that's what I did just before the video. If it goes any lower, what I'll do is just continue to scale in down to those levels, but not below. Again, I'm using NG, so look for a back test of that trend line is the maximum placed if I add to it. But I might not even add that. I prefer to see it bounce here. And again, going back to that chart, sorry to be so waffly, I just want to talk about NG, since that has a better picture. That's probably my last buyback point if I decide to add any more back to it. Right here, 259 or so, 259.2, and with a stop somewhat below, unless I double down and bring my position down, and then I might allow for a back test of that trend line, but not much below it. The problem with back testing, see, is that you can back test and you come down, and then you can keep back testing is with the security walking down the trend line. So when I say not much below it, that would be, again, a maximum stop for me, and that depends on where, if I entered somewhere else, then it would be maybe a different stop based on my entry price and my price target. But looking at the risk reward, that's a pretty nice move if we get up to that 2.915 target. And again, there's plenty of targets up above that as well, and I might add additional targets if the bullish case firms up. But when you look at the bigger picture, I'm going to erase those lines and talk about that just so you kind of know my mindset. This was a bullish falling wedge pattern, pretty big one at that. And that would project the measured target as the widest part of the wedge right there, added to where we break out. Now I'm just eyeballing this. I'm not. I didn't replicate that line, and that would bring us up there to that about to that 314 target. What does that mean from where we're at right now? That's about 20%, 21%. Therefore, you can allow a stop that's at least 5, 6, 7% somewhere along those lines. That would still give you an attractive risk-reward ratio. And coffee, not giving up on this one yet. Not crazy about today's action so far, because we keep flirting with this 108.60 level. decent, not the best, but a decent support level. We bounced off it there, but then we dropped below it, and then we took it back, and now we're just a hair below it. I don't know. We might have stopped trading for the day. It's 2:30 p.m. It's about, I think that's about when coffee shuts down for the day, and then picks up later tonight. But again, you still have these big positive divergences in place, and we're close enough to that level. So hanging in there, it really should not violate these recent lows, in my opinion. The divergences still may be intact, but I'm just not going to like that price action. So I think that makes a nice stop just below those recent lows for those of you trading coffee, whether it's KC or JO, which I also posted a chart on the homepage today. And then finally, let me just show you a couple potential trade ideas. I started, I'm still been trying to get my rest, not in front of the computer much, but I spent a little bit of time today going through some various stocks and looking for individual trade setups. One that stood out to me, it was a big gainer today, is this one, AXGT. Now I'd like to do a little due diligence on the company, and I did a quick overview. They have a couple things in clinical trials, including one, I believe it's in phase 2 clinical trials for Alzheimer's. They do gene therapies. So what I like about it, is technically you can see this. It took out this trend line. See the white down trend line here? Took that out, broke down, back tested, held on this $3 support level. But lately it's been moving up, and it's been moving up on volume. See my volume bars down here? There's a lot of buying coming in this stock, and I like that. It also took out, I had a resistance line here about 451, flirted with it, and then a nice impulsive move off that level today. It's up about almost 20%. But again, more of a, the chart's there. The technical case can be made, and I might do a little more due diligence. It's just, amazing what some of these, gene therapy companies can do. And there's a special I saw recently, a couple weeks back on Nova. They talked about CRISPR. It's amazing what they can do now with genes using CRISPR. I mean, go in and split a gene and insert, the correct, tampering with the DNA in order to, then these applications fix, come up with cures really for a lot of horrible genetic diseases. And I don't know much about this company, but I'll look into it. I like the chart. I like the movement here. And these are all potential targets, these lines here. This one I must have put these lines back here a long time ago. But I did update right here. This 787 is a near-term target. And let me just put this line on because I think it's relevant. It's an older line I had on the chart from a while ago. And that is about 1476. Yeah, I'll leave that line there. That's more of a not an exact target. I'd have to play around with it a little bit, but let me just leave it there. I had that as a support level before, a resistance level, and I'll leave it there. I just moved it and it made it 15.21. So you can see, we'll call that $15 if you want to be safe, or $14.90 is a potential longer term target. But I think this will be a pretty big level, that 787. I'm going to round that up. People love round numbers. We'll call it 790 right there. That's the target I'm looking at near term. And again, I'm also watching volume to see if the volume continues to come into this one as it has been. Okay, a few other individual stock trade ideas that picked up on today. DKNG, that's DraftKings Inc. Back here a few months ago, was that in May or June, I pointed out that one would trigger a sell signal on a break of this trend line, broke down, back tested, and after the back test dropped about 30, I think 40% almost to that 2760-ish level. Since then it powered up and it's put in now a big divergent high. Now we don't have confirmed divergence. Need to see this PPO turn back down. What will probably cause that is a breakdown of this trend line. So that's when you want to look for. Not the most well-defined trend line, but I think enough, especially if you're a somewhat aggressive trader. It's a counter trend trade. I would zoom down to the 60-minute chart, and that's where you see a nice little bearish rising wedge right here. And so there's your level to watch. So I'm going to set a price alert. And pullback targets on this one, well, let me just show them to you now on the 60-minute chart. Certainly have first support right there, about 55.39. And I think at minimum this one will come on back here at about roughly that $48 level, and quite possibly more. Yeah, I'm going to give you this target here. That would be the final target there, about $44. So you're talking when we get that sell signal, drop of about 26%, not bad. And nice thing about it is, stocks tend to fall fast when they rise, so that should be hit fairly quick, I think, if we get that sell signal. And another short entry or short candidate would be PRTY, Party City Holdco or Holdings, whatever it is. That's a stock that I remember once in a while my wife will come home and tell me if she's out shopping companies to short. She was dead on Toys R Us and some others in the past. You go in the stores and based on how the stores are, and if they're ghost towns, inventory sucks. That kind of thing. And this one looks like it was headed there. It was down to 25 cents. And this is where the Fed came in, remember, and bailed out pretty much everybody. Companies like this that were probably going to be wiped out with their debt. The excessive debt load and the fact that it was probably below investment grade. I'm pretty sure when you see a stock heading down to 25 cents, it's pretty safe to say that their bonds are no longer investment grade rated. So I'm assuming that was a lot of the pump up there by the Fed. And again, you can do your own due diligence. Who knows? Maybe some other, some buyers came into the stock and change a guard with management. I don't know, but all I can tell you is from a technical perspective, nice looking short. It ran into this downtrend line right there recently, failed at that, and you had this nice clean bearish rising wedge right here. There it is. Boom. Negative divergence confirming the bearish nature of the wedge, and a recent breakdown. Where does it go? I think at least down here to 125. Again, this company, who knows? Maybe they'll turn it around. Maybe they'll stay in business. Maybe if you're listening to my voice, you love Party City. I don't know. I haven't been in there, but 125 again would be my first target. If that goes 72, and if that happens, you're also going to drop back below $1. That is very bad for a stock. That $1 level. That's where companies will face delistings if their stock trades below the $1 share price for too long. Now, a lot of times they'll come in with some shenanigans, try to reverse stock split and all that. But again, if the charts indicate that's where the stock's going and the fundamentals align with that as well. Again, like anything, if you're going to short a low price stock like this, you might want to do your due diligence because there's a lot of gain potential, but there's also a lot of potential to be caught in a short squeeze. But again, that's what stops are for. What would burn you on a company like this would be, say, offer a buyout offer or something like that. Maybe they're getting taken private, or somebody's buying them out, and then you could gap up big above that resistance level. But barring a gap, and I would say stops are great. They're necessary in trading, but they're not the be all and or the cure all or be all end all. That is because you can have a trade that you're in gap above or below your stop if you're long or short. And so the way to really mitigate that risk is diversification. Don't ever put all your money in one stock. Don't even put a good chunk of your money in one stock, especially a low price stock like this. You're not going to see Apple gap down 30-40%, but you can see a biotech stock or a low price stock like this gap up or down 30-40%. So you never put as much into a stock like this as you would into Apple or SPY or Amazon or anything big like that. Finally, the solar stocks are on my radar for a correction. They've had one heck of a run off the March lows, very strong run. If you're looking at this one that pulled up here, SPWR, SunPower, looks like maybe some bull flagging action, a recent breakout. strong. There are zero, let me repeat, zero sell signals on this or most of these right now. However, they are getting really extended, and for the first time in quite a while, we have negative divergence on a lot of these stocks, and I'll probably do a separate video on them. I'm keeping them on my radar again because they're not actionable trades right now. These are setups, potential divergences. Divergences can be burned through. If these guys continue to rally, then what they're going to do is take out those divergences. But otherwise, we may put in some divergent highs, and it's across the board. A lot of them have been building divergences. I just need some. I don't have a lot of clean uptrend lines, and I don't have a lot of clean horizontal support levels. So what I'll be watching for are any type of bearish reversal, candlestick patterns, things like that. On some of these, and again, I'll go through the list. I haven't done a comprehensive analysis of the whole sector, but here's one that's already broken down. FSLR, First Solar. What it did, it ran into resistance. See that previous reaction high back here from 2018? Hit it to the button, and then broke the trend line, and so that was a sell signal. Now, part of it came on a gap down. There was still plenty of meat on that short trade, but it fell to the first, what would have been my first support target level right there. And so there was still another 10% drop, but we hit support and we bounced, and it's moving back up. But what it's doing right now, so here's one I'll be watching intently. See, remember when the breakdown occurred, it was on a gap? That was it. There's the bottom of the gap. I put it at the bottom, that red candle that closed on the trend line that day. So that's gap resistance, and we've just backfilled it. I can tell you, super aggressive, but that's an objective short entry. But with the fact that so many others are not, they're still in uptrends without sell signals, I'd pass on this one for now. May want to go on back tests, may want to go into new highs. It may fail here, but I just want to point out that I'm watching the sector and watching a lot of these stocks build these big divergences and reach really pretty much extreme overbought levels, especially on the weekly charts. Okay, we're going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.